Hello, this is Joe Pryor in Oklahoma City, and it is June, and I want to talk about current market conditions in Oklahoma City and Tulsa real estate. Now, the one thing that we know, of course, is the last couple of years have been a little crazy. We've seen prices just really dramatically rise across the country, a lot of pent-up demand from people in lockdowns, people who realized that they need a 4-bedroom home if they own a 3-bedroom home, people leaving apartments. A lot of money that was being saved and it's being put into homes, and the supply and demand made the market a little crazy. A lot of overbids, a lot of multiple offers, and that was the situation for about 2 years, because the other big factor was interest rates were ridiculously low. Federal government, in terms of the Federal Reserve, was buying up mortgage-backed securities and treasuries in order to keep interest rates down, and they were unbelievably low. And so everybody was going, well, I'm going to buy a house. It's cheaper now to buy a home. Well, then all of a sudden inflation hit for various reasons, which we're not going to go into, but right now it's at about 8.6%. All of a sudden the Fed goes into crisis mode and saying we're going to stop buying mortgage-backed securities and we're going to start rising interest rates. We're going to make them go up, mainly because we got to reduce the money supply to get inflation under control. And so that is going to affect the real estate market. Now, if you look at statistics of last month in May, it doesn't look that bad. It looks like we're still on sell a lot of houses, prices are going up. But remember this, interest rates were already locked at lower rates on properties closing in May, because this has been a very quick rise in interest rates. And so if your interest rate was locked, you were in great shape, but we're now in June, and things are different because now we're talking about 1.5, 2 points higher in interest rates, and that's taking people out of the market. And it's a good thing for investors, and it's actually a good thing for owner occupants, because a couple of things are going to happen. First of all, we're starting to see the market slow down. I saw a pretty good amount today of houses with price reductions. Haven't seen that for the last 2 years. I'm seeing houses come back on the market. Mainly because the people that didn't lock their interest rates now are out of their ratios and can't buy the home anymore. And so it's not going to crash. Oklahoma City only went up about a little over 13% per year in the last 2 years. And that's not a lot if you compare it to some place like Raleigh-Durham, where it went up 35 to 50% per year in the last 2 years. And the reason why we can sustain our prices and not crash is the affordability index. I'll give you an example. If you're going to buy in the Raleigh-Durham area right now for a home for whatever reason, if you're outside, I'm talking about 50 miles outside of the area, you're going to be paying a good 30% more than Oklahoma City. If you're in the Raleigh-Durham area itself, within the city structure, is going to be 50% or more in terms of what it costs for a house. Now, here's the significant factor. In Oklahoma City, our median household income is $8,000 more than Raleigh-Durham. And that means a lot of people can't afford those homes. And so those prices are going to come down. Whereas in Oklahoma City, it's going to level out. Now, we may still see some price reductions, but Oklahoma City is strong. The real estate market is getting back to a normal supply and demand. The craziness is gone. And so now is a great time, if you're an investor or wanting to buy a home for yourself to live in, to buy in the Oklahoma City or Tulsa market.